Canadian housing market panic, how sentiment turned negative so quickly. Let's dive into what's been happening with the Canadian real estate market, because the shift we've seen over the past couple of months is nothing short of dramatic. A couple of months ago, back in late 2024, think December or so, the sentiment around housing was what you might call cautiously optimistic. People weren't throwing confetti or popping champagne, but there was a sense that maybe, just maybe, things were starting to look up after a rocky period. Articles and reports from that time, like those you'd find in the Globe and Mail or from industry analysts, were pointing to a potential rebound for 2025. Why? Well, a big driver was the Bank of Canada slashing interest rates, down to 3.25% by December, a pretty significant drop from earlier highs. That kind of move tends to get people's attention because it lowers borrowing costs, making mortgages more affordable, at least in theory. On top of that, there were some hard numbers to back up the optimism. Home sales in November 2024 had spiked by 26% compared to the year before, which suggested that all that pent-up demand, folks who'd been sitting on the sidelines waiting for the right moment, might finally be breaking through. Analysts were buzzing about this. Economists and real estate agents quoted in places like the Globe and Mail were tossing around phrases like much stronger and resilient 2025. Re/Max, a big name in the industry, even put out a forecast predicting sales increases in most regions across Canada, and a 5% bump in national home prices. That's not a wild boom, but it's a solid step up. Online, too, you could see this hope bubbling up. People on social platforms were talking about how lower rates and some tweaks to mortgage rules might finally give buyers a fighting chance. Sure, affordability was still a nagging worry, prices hadn't exactly crashed to bargain basement levels, but the vibe wasn't doom and gloom. It was more like a collective, okay, this could work. Fast forward to the last couple of weeks, here at the end of February 2025, and wow, has that mood flipped? It's like someone turned off the lights at the party. Reports from the Canadian Real Estate Association, or CREA, as you'll hear it called, showed that January sales actually dropped 3.3% from December. That might not sound huge, but it's the trend that's worrying people, especially since the tail end of January saw an even sharper slump. What's behind this? One big word, tariffs. Specifically, threats from the U.S. about imposing new trade tariffs have started casting a long shadow over everything. Media outlets like the Financial Post and BNN Bloomberg have been all over this, pointing out how a record spike in new listings, up 23% compared to last year, has flooded the market. Normally, more homes for sale might sound like good news for buyers, right? More choice, maybe some leverage to negotiate. But here's the catch, buyers aren't biting. They're holding back, and that hesitation is palpable. Articles are now digging into this tariff uncertainty, like it's the villain in a suspense movie. RBC Thought Leadership, a respected voice in economic analysis, called it a dark shadow, hanging over the housing market, and that's not just dramatic phrasing. If tariffs hit, it could mean higher costs for goods, disruptions to trade, and a ripple effect that stalls Canada's economy, especially since we're so tied to the U.S. Online discussions have picked up on this too. A couple of months ago, people were posting about recovery hopes, maybe even dreaming of snagging a deal. Now, the chatter's all about economic fallout, stagnation, or even a full-on decline. There are still a few glimmers of light, like the Bank of Canada cutting rates again to 3%, which could theoretically spark some activity, but those bright spots are getting drowned out by a growing sense of unease. It's not quite panic stations yet, but the confidence from late 2024. That's long gone. Now let's zoom in on Toronto, because the story there is even more intense. It's like the national downturn on steroids. A couple of months ago, in late 2024, Toronto's market sentiment was hovering in this tentative, almost hopeful space. The Toronto Regional Real Estate Board, or TRREB, was projecting 76,000 home sales for 2025, not a record-breaking number, but a sign that things might be stabilizing. Rate cuts were a big part of that optimism, and there was this seasonal buzz about a spring rebound. Spring's always a hot time for real estate, so it made sense to hope. Media reports, like those in the Globe and Mail, were pointing out high inventory levels, lots of homes on the market, but spinning it as a buyer's opportunity. More listings could mean more room to haggle, right? Some experts even suggested the oversupply of condos, which Toronto's been wrestling with for a while, might finally ease prices down a bit. That could be a silver lining for first-time buyers or anyone who's been priced out. Online, the vibe was mixed. You'd see some people saying, "Hey, maybe the market's leveling off, this could be our chance," while others were still grumbling about affordability. Houses and condos in Toronto don't exactly come cheap, even with a few more options out there. But overall, it wasn't a negative tone. It was more like a "let's wait and see how this plays out" kind of feeling. Cautious, sure, but not dire. Contrast that with the last couple of weeks, up to February 2025, and Toronto's sentiment has absolutely tanked. It's like the bottom dropped out. Articles from the Star are reporting that January new home sales hit a near record low, not exactly the headline you want to see. Blog TO chimed in with some jaw-dropping stats. Active listings surged by 70.2%, the highest level in 16 years, while sales dropped 7.9%. That's a double whammy, way more homes sitting unsold and way fewer people buying. The Globe and Mail described it as anxiety rattling the market, and that feels spot on. Buyers are pulling back fast, while listings just keep piling up. Reports from RBC are predicting condo price declines, blaming oversupply and a dip in investor interest. Those folks who used to snap up units to rent out or flip are nowhere to be seen. Nesto, a mortgage platform, pegged condo prices down 3.4% from last year, which might not sound massive but signals a trend that's got people spooked. Online, the chatter's gone dark. You're seeing words like collapse and crash thrown around, not just whispers but loud worries. There's this extra layer of fear about U.S. tariffs hitting Ontario especially hard, since Toronto's economy leans so heavily on cross-border trade. 2 months ago, there was this cautious, maybe we're turning a corner vibe. Now, that optimism's evaporated, replaced by a distress you can almost feel through the screen. It's a stark shift, and it's happened fast. So, stepping back to the big picture, real estate sentiment across Canada is on a downward trajectory. 2 months ago, the broader market had this hopeful streak going. Those rate cuts and sales gains were fueling talk of a 2025 comeback, not a roaring one, but a steady climb. Now, as we wrap up February 2025, that's faded into something jittery and uncertain. It's not a total collapse, let's not get carried away, but it's a pivot from cautious optimism to what you might call guarded pessimism. Tariff threats are a huge part of it, messing with people's heads, and then there's this supply glut, tons of homes for sale, but demand just isn't keeping up. The media's tone has shifted too, from recoveries in sight to uncertainty looms large, and that mirrors what you see online, a slide from opportunity to risk. In Toronto, though, it's more than a slide, it's a plunge. Late 2024's "maybe it'll turn around" has morphed into a near panic in these last couple of weeks. Reports and articles are spotlighting a market that's buckling under all this inventory, with buyers retreating and tariff fears pouring gas on the fire. Online sentiment swung from tempered hope to outright alarm. People are talking about the market unraveling, and that's a word that sticks with you. Compared to the national picture, Toronto's downturn feels faster and sharper, like it's leading the charge into this gloomy territory. Where do we go from here? Hard to say, but one thing's clear, we'll need to keep our eyes peeled. Any major economic shift, whether it's tariffs kicking in or something else, could hit the Canadian real estate market hard and fast. This story's far from over. If you found this video and information useful, please smash the subscribe button and hit the notification bell so we can keep providing you with timely information you can apply on a daily basis.